Hi, everybody. Dr. Robinson. It's a weekly meeting of the Money Masters Investment Club for November 18th, 2022. I'm not going to spend a lot of time on a video tonight. Um, just cover some of the important things that we've experienced for the week. So let's kind of get to it. Per our usual, our itinerary this week, pretty simple. We're going to talk about our financials, a little bit of a market update. Market's been strange for the last week or so. It's been hard to trade. You'll see that I did add some slides this week to show you what the market's been doing, but the market has been very what we call choppy. It's hard to get into a trade. It's hard to stay in a trade. Candles kind of go one way or the other, sometimes the wrong way. But in any event, let's look at the financials, and then we'll look at some of the other things. For the week, not all that great. So our starting NAV at the beginning of the week, $23.82. We're down 89 cents for the week. Our ending NAV, $22.93. That comes out to a 3.7% loss for the week. So nothing to write home about. It wasn't all that bad. We had some good trades in there. We just had a lot of little trades that just went bad on us because the market is so choppy. Our charts don't do well. Algorithms are really tough to work with when the market is choppy. Not making excuses or anything. It's just one of those things, and we're going to get it back. Hopefully, get it back next week. I have decided I did trade a different market a little bit today just to kind of get out of some of the choppiness of the spider. So I did trade the Russell 2000 a little bit. Had a little bit more success there today. Of course, those numbers today today's numbers don't apply to the numbers you see on the screen. They'll be on next week's slides. But we did have a pretty good day today. But I did trade mostly the Russell 2000 today just to kind of get out of some of that choppiness that we're seeing in the regular market. We still have our strangle going, unrealized gain. The strangle has lost a little bit in terms of, you can see the in the money part on the calls. They've come down a little bit simply because the market has come down, but the market's not really going down, but it's not going up either. So, and that kind of goes along with that choppiness that we've been talking about. So the calls right now are in the money by $1.21. The puts are in the money by 44 cents. Last week they were out of the money. This week they are in the money, so you can tell that the market has come down just a little bit. Our gains have gone up a little bit from last week. Currently, the unrealized gains, $238,104.77. So I expect to continue holding this. We've still got some time before I have to make any other changes to it, but I'm hoping the market breaks one way or the other. If you remember last week, I was kind of optimistic that maybe it was time for the markets to kind of start making a run up. I was kind of bullish. Not feeling it right now. So the markets are kind of ambivalent. I don't know if it's just we did have a lot of Fed speakers this week, by the way, guys, and I think that's a big part of the volatility of the market today, or this week rather, simply because every day this week we had somebody coming out talking about where they think interest rates ought to be. They were asked questions about whether they think the market has gotten ahead of it or ahead of the Fed, which I think they have. And some of the comments from the Fed were pretty damning in terms of what the market's done. In fact, one of the Fed members, James Bullard out of St. Louis, he kind of went on record. This was on Thursday, and said that the Federal Reserve, the Fed funds rate might have to go between a minimum of 5 up to about 7. If you remember the slides last week, I showed you a slide where the market has priced the Fed funds rate into next year at about 4.8, maybe even a little bit lower. And so now the Fed's come out and said, or one of the voting members of the Fed has come out and said a minimum of 5 and could be as high as possibly 7. That's a long way from 4.8. So the Fed was trying to send a message, I think, to the market to let them know. The market hasn't bought it all hook, line, and sinker yet. I think that day's coming. So I did have a conversation with some of our members over the last couple of days, and I'm not quite as bullish as I was, let's say, last week, because the market should have been able to add on to the gains of last week, and they just have not been able to do it. It hasn't gone down big; it just won't go up. The futures in the morning, every morning, imply that the market's going to go up, and just during the day, it kind of melts off and trades sideways most of the day. And I'll show you that in some of the slides here in just a bit. But it's tough trading here. That's why I did kind of go to the Russell 2000 instead of the Spider, trying to find a little bit. They kind of run in sync, by the way, guys, but there's less choppiness in it, so you can kind of get a little bit better run for a bit and get out of a trade. While I'm here talking about this, by the way, I have kind of, because of this choppiness of the market, we're trading very short term right now. We've had to go to some very short charts. And therein lies the problem. When you go to a short charts are very susceptible to changes. And some of the changes, even though the trend may not change, sometimes you get a candle that goes 20, 30, 40 cents in the wrong direction. Now you're holding a position and you got to ask yourself a question. Is this going to continue going the wrong way? Or is this just a minor little blip and it's going to come back? And those are hard decisions on a short chart. On a longer chart, we can wait them out a little bit. On a short chart, we can't because they can get away from you in a hurry. And that's where some of our losses occurred this week, where we try to make a decision. And I just started taking the loss at some point, just simply because it's sometimes these things move so fast, you can't really extrapolate from any of the data anywhere else about whether this is going to be a long-term move or not. We also did suffer, again, part of that news cycle when some of the people were speaking. We would be in a trade and we'd be profitable, and then somebody come out and say something. And this kind of reminds me back in 2020 when Donald Trump was still president. And every once in a while he would tweet something and it would make the market go crazy. Last week we had a lot of that. Mostly it was the Fed. I've always been a believer that the Fed shouldn't be speaking during the market hours, but uh, who am I to tell them what to do? But in any event, there were a couple of places where we get into a trade, we're doing okay on the trade, and then somebody said something, and immediately the trade goes the wrong way. And it's tough to, you go from being up maybe $15,000, $20,000 on a trade to being down $15,000 or $20,000 trade, and it happens in a matter of 1 or 2 seconds. So that's the kind of stuff we're fighting right now, but we'll get through it. It is a minor blip. I expect trading next week to be a little bit more muted. When I say muted, not as choppy. Of course, we've got a holiday next week, so the markets will be closed on Thursday. And I'm not sure if they're closed on Friday. I think they're also closed on Friday, but in any event, they'll be closed on Thursday. So we got 3 good trading days next week, and they should be a little bit more muted than what we've seen in terms of the choppiness this week. That's my hope anyway. It is the beginning of a period we call the Santa Claus rally, where because of the holidays, people start feeling a little better. The markets have a tendency to go up a little bit, especially because a lot of the companies that sell Christmas stuff, presents and stuff, they do better during this time of year. So Walmart will do well, and that bodes well for the stock market in general. In terms of, you can see the treasuries also have kind of changed again because of if you remember a couple of weeks ago when the Fed, or I'm sorry, when the CPI number came in, so 0.2% lower, which wasn't that big a deal to me, but the market kind of overreacted to it, and we saw those treasuries sell off. And I shouldn't say sell off. We saw the yields go down, so the yield sold off, not the bonds. The bonds kind of exploded in value. Remember, the price of a bond is opposite of the yield, and yields are starting to come back again. So they haven't come back all the way, kind of like the market. So it's kind of like halfway. It's choppy. We're seeing a lot of choppiness in the bond market as well. So I'm not going to go through all of the yields, but you can see that the short end of the uh, line in terms of bonds, of the bond yields, the short ends have moved more than the long end. So, for example, the 1-year Treasury is up 12.9 bips in the last week. The 2-year Treasury up 17.5 bips. 3-year Treasury only up 9.65, only up 6.2. The 7-year Treasury 4.6. And notice the 10. The 10 really hasn't changed a lot. And there again lies that the idea here that the market's really not sure which way to go. It doesn't feel like it can go higher because everybody at the Fed keeps saying we're not done raising rates, and the markets are getting ahead of everybody. But at the end of the day, they're also thinking, there's got to be a pivot because we've got a recession. We're starting to see more and more unemployment numbers, or at least some of the big announcements from Amazon and some other companies. We're starting to see a lot more layoffs. So we kind of believe that the Fed at some point is going to say, you know what, we're going to have to start lowering interest rates, or at least not raising interest rates any further to kind of reduce the unemployment issue, because nobody wants to see unemployment numbers kind of ratchet up, especially just before Christmas. So the 10-year hasn't moved a whole lot. And in fact, the 30-year has gone down a little bit. So we are starting to see on the short end, we call this a steepening of the curve. So we're starting to see a steepening of the curve, although it's flattening on the 10. Again, that's just that indecision of the market, so to speak. And we'll wait to see how this plays out over the next week or two. But again, the markets are kind of in a melancholy state. Nothing really to drive them higher, but there's nothing really to drive them lower. I kind of told you a week ago in that last meeting that I was becoming more bullish, and I'm starting to think that if this continues, we're probably going to see a downturn here pretty soon, because the bulls can only carry this for so long, and the bears are kind of chomping at the bit to kind of drive the market down a little bit. They want to get some better prices on some securities. So I expect to see maybe a decrease if we don't get to the point where we can break the 400 level on the spider. We hit it briefly this week, but it bounced right off it, and we closed the week lower, even though the market was up a little bit today. For the week we were a little bit lower. The market just simply cannot tack on to any of the gains that they had previously. 6-month bill, T-bill, still got a whopping rate on it, 4.642. So if you are thinking about putting some money in some place other than the stock market, the 6-month T-bill, it's not a bad place to go. Pretty good yield and very small, very little duration on that. Mortgage rates ticked up just a tad this week. They went from, I forgot what they were, but they're currently 6.84 on a 30-year, 6.22 on the 15-year. So interest rates are ticking up a little bit, everything except for the long-ended stuff, the 10 and the 30, kind of sit and put for the moment. By the way, just to put this in perspective, if you remember our general rule that we live by, whatever the Fed funds rate is, you add about 3 percentage points to that, or 300 basis points, and that gives you the rough idea of what mortgages or mortgage rates would be. So if Bullard is correct, and he's talking about going to maybe 7% on the Fed funds rate, that means mortgages would be up in the neighborhood of 10% or so. And again, 10% mortgages. Now, I'm old enough to remember a time when we saw 10% mortgages. Most of you probably aren't. So there's a real good chance that the housing market will kind of, I don't want to say collapse, but it's going to come down pretty hard when it comes to house prices and things, simply because I can't imagine too many people willing to buy a house with a 10% mortgage on it. So at the end of the day, it is what it is. There's nothing we can do about it. But and again, it's not certain that just because Bullard says he thinks that this could go as high as 7 doesn't mean it's going to. He is very hawkish, by the way. If you know anything about him, he's been around the Fed for a very long time. He's a smart guy. He's one of the few that I can tolerate. Most of the economists in government I don't care for. They're a type of economist called the Keynesian economists, and they believe that math solves all the world's problems. And people like me come along and say we're the libertarian, so to speak. We're kind of against the Keynesians, and we don't believe that math can solve all the problems. So at the end of the day, he may be right. Even if he's not exactly right, he is kind of implying a higher Fed funds rate than what the market has priced in, and that doesn't actually bode well for the economy going into the new year, and of course going into second quarter of next year. The last couple of slides, I pulled up slides from the week, so I've kind of made them a little bit bigger. You can kind of see what our charts look like. So um, the way it's been working lately this week is it's been fairly easy to trade in the morning, but it gets really hard in the afternoon. For example, you can see about 10 o'clock on this particular day. This was Monday, by the way, 11/18. So on Monday, you got a pretty good signal on calls. If you jumped into calls, you would have had a pretty good run. Um, but those calls ended about, and I don't have the exact times on there, somewhere between 10 and 11. But the calls topped out at say 10:15, maybe 10:20. Then it looked like it was going to be puts. But what I want you to look at it, and this is where the hard part of this becomes. You see some of those, we call them wicks. You see the candle body, you'll see the green, and then you'll see a green line above that. We call those, these are candles and candle wicks. And it's the wicks that drive you crazy. For example, if you bought puts at 1020 or so, the puts ran for a bit and you got some money. But one of the things you'll notice, it's a little hard to see with this particular chart because I kind of chopped them up a little bit to make them smaller to fit the screen. But there's a green candle in there on those puts. So if you were in puts, you're up maybe if I'm doing 1,000 contracts, I'm up maybe 30 or $40,000. And then this green candle comes in here with this big wick, and that green candle puts me down maybe 5 or 10,000. So I went from being up 20 or 30,000 to maybe down 5 or 10,000. And the hard part here is the question has to be, is that candle going to continue? Because we don't have crystal balls. All we do is go by the math. So at some point you come along and you say, well, I've got a profit here, but immediately it goes away and now you're in the hole. And the question becomes, do you sell? Do you hold? Or, what are you going to do? Or do you strangle it? Or do you double down? We have some other strategies we can apply. But at the end of the day, the safest, the easiest thing to do is just go ahead and take the loss. Now, in this case, it wouldn't have been that bad because you had such a profit, you had a good profit on the run up that you're okay. But again, you can kind of see the mess it is in the middle there from, let's say, 10:20-ish to 10:30 or so, right up until 11 o'clock. The market's not moving anywhere. You're getting reds and greens, you're getting blues and purples. These are things that tell us whether the market's going up or down. And frankly, we can't even tell from these charts. So what happens here is, and I remember this day exactly because at 11 o'clock, the market tanked. Now, it was news related. It had nothing to do with anything, what the markets or the algorithms were telling us to do. Somebody made a comment and the market tanked. But because there's so much confusion for the last half hour from 10, let's say 10:30 right up to 11 o'clock, we haven't gotten in a trade and we're not confident enough to take that, when it first turns red there, we're not confident to take that red or the puts there simply because there was nothing before that to indicate that the market was going to go down. And that's common with news related stuff. So what happens here is in a couple of minutes, you're down there at the bottom. Now, once you're down there at the bottom, you can see that it was a good chance to buy some calls to run it back up. But again, right after that, you go through another couple of minutes, actually probably an hour or so of just you don't know what to do. We're starting to see a lot more of this, and this is why we call this choppy. Normally, we see charts that kind of go up for an hour, maybe come down for an hour, go up for an hour. So it's much smoother than what this is. This is choppy. This is like being on Lake Michigan or something in high winds, and that boat is going up and down, and you're getting seasick, and it's hard to figure out which way to go with this. So anyway, that was Monday. Let me show you a picture of Tuesday. Now, Tuesday started out even worse, and it wasn't really good trading in the morning. There were a couple of trades we did in the morning, but again, we couldn't hold them very long because they went away so quickly. But at 1 o'clock, you see a little after 1 o'clock, you had another one where a comment from somebody comes in and wiped you out. And I was actually in this trade. I had bought the calls there right around 1 o'clock. So I'm in the calls at 1 o'clock and I'm just minding my own business trying to make money. And somebody goes out and says something and the market just absolutely tanks. So I end up losing a bunch of money. I lost all the profits there. In fact, I lost all the profits I had from the day because I had traded a bunch in the morning. So I had done 3 or 4 trades in the morning, had made some profits, but they all get wiped out with this one chart here at from 1 to 1:30. And then, of course, at 1:30, you try to go back in. You think, well, okay, so this has hit a bottom. Let's buy some calls and try to ride this up. And you'll notice that there's a couple of candles there. And then while you're in there, there's a couple of candles that go really down. So again, you get caught between the bulls and the bears here, or this choppiness in the market. It's hard to know what to do. And then, of course, it turns red again right around 2 o'clock. And then 2:05 goes back to green. 2:15 goes back to red. It's really hard to trade in this kind of stuff where there's this much volatility. And I shouldn't say it's volatility, it's just this much choppiness because it's not volatile at all. We like volatility. This is just annoying, frankly. That was Tuesday. This is the 17th. This is Wednesday. So Wednesday started out. We had a pretty good morning. You can see it was a pretty easy trade. Calls at 9:30 in the morning. Ran those up till roughly 10. It wasn't quite 10, and then ran the calls down, and then the calls back, or the puts down rather, calls back up. So pretty good there. Ended up getting into trouble though there at about just before noon. Looks like it's going to be puts again. It's hard to see with that blue line there, but it did turn over for a moment, got back into calls, and again, what happened is somebody from Fed said something, and the market spikes up. And of course, I was in puts at the time because it had been rolling over, and the puts all of a sudden I lose that money, and this thing runs up, and it ran up very quickly. This is I forget what chart this is. This is a 3-minute chart, but it ran up for about 9 minutes, and 9 minutes it ran hard. So again, most of my profits from the morning get wiped out on that one trade because somebody from the Fed comes in and says something, and it either spooks the market. Now, clearly the market liked whatever this person said. I think I remember what that one was, but at the end of the day, we never can predict what they're going to do. But when the Fed speaks, this is what happens to the market. It just becomes a market that is almost untradeable to some extent. Now, I kind of had a conversation and thought, well, maybe what I should do until we're done with the Fed this week is maybe just trade in the morning before they have a chance to speak, and then once they start speaking, just get out of the market and let them have their way. But you can see the volatility here, so you can't make head or tails out of the market right now with what's going on with all the Fed speak. This second to last one here is this was yesterday's. This was actually this might have been today's. I might have been a day behind, but this is today's chart. So we started down pretty well in the morning. So I had some pretty good runs in the morning to the downside, and then got a little messy here about noontime again. I walked into another trade about noontime, and I don't know if it was somebody from the Fed who said something, but all of a sudden the market let loose again. So a good portion of profits get wiped out again from the trade at noontime. So at the end of the day, this is tough. And if you look at this, if you go down to, let's say 12:15 or probably 12:30ish or so, you can see the market is trying to go up, but the candles aren't really cooperating. So all the charts are saying the market's going to go up, but there's really no profits in there. And then it turns back to red and goes down pretty hard. And again, you got to make a decision about, do I hold? Do I just take the loss? Do I try to strangle it? What do I do to solve this? And it just gets to a point where it's almost like I said earlier, it's almost untradeable at times. But I don't expect this to continue next week. I certainly hope it doesn't. But I am going to work on some shorter charts this week just in case. Or this weekend rather. So just in case the market does want to kind of stay with its choppiness, we'll go some shorter charts and then be a little bit more discerning about which trade we're going to get into. We may have to let some trades go. By the way, this is a 3-minute chart, and what I've been trading on lately is a 1 and a 2. I kind of lengthened them out a little bit so they're not too fast. But this is not the actual chart I've been trading on, because this one this is just not very clear. So I've taken some shorter charts and put some longer, lengthened the algorithms on it, if you will, and trying to get a fast chart with some slow algorithms on it, which probably doesn't make any sense to you, but just trying to slow the market down a little bit in terms of trying to figure out or trying to help us determine which way the market wants to go, at least for the next 2 minutes or so. And that's what it's been like lately, guys. It's been where you get into a trade, and sometimes within a minute you're out of the trade. It either went the wrong way and you got to take the loss, or it's gone your way and you want to go ahead and lock in your profit. So trading has become very frantic. To give you an idea, I normally, when the market is kind of acting normally, I usually do 3, maybe 4 trades a day. Yesterday I did 10. One of the guys who traded with me, Mike Harvey, yesterday did, I think it was 20. It may have been 18, but 18 to 20 trades. We're doing all of those trades simply because the market is changing direction so quickly. And to try to keep up with it, we have to place all these different trades. So our trading costs have gone up a little bit this week simply because, I don't normally do 10 trades in a day. Today, by the way, I did 11 trades. So 10 trades yesterday, 11 trades today, 21 trades just in the last 2 days. That would normally be enough for me for almost 4 weeks, but that's the way we have to trade right now simply because the market is just bonkers right now. But that's the results for the week. So I know they're a little disappointing, but we're going to live to fight another day. And if you have any questions about anything, of course, guys, send me an email, text, whatever it is, and I'll get back to you as quickly as I can. Other than that, enjoy your weekend. And if I don't get to see you before next weekend, enjoy the holiday as well. See you later, guys.